Boekdoos, I believe we're in a bit of a perfect storm right now in terms of emerging markets with Russian sanctions and the potential of a trade war with China looming, and also obviously the Fed in the US looking or already beginning to tighten monetary policy. What does that mean for you?
You're right, there are quite some things going on currently and things that may frighten investors, sometimes for good reasons, sometimes for bad. It's clear if sanctions can be extremely bad for Russia, especially the latest one we've seen, because they're really targeting some companies extremely hard. I think Rusal Aluminium is quite a bit in trouble. But will they go on with that? That's unclear. So clearly, Russia, you have a local problem that may worsen, but they said we will add on sanctions, etc. But then, you know, Trump, and then he came back, there will be no more sanctions, whatever. The difficult part there is the unpredictability. Right. That generally leads to a very risk-averse reaction of investors. I think we've seen that. We've seen a very strong sell-off in many names.
Right.
If they really get those sanctions, then it probably will go much further on some of them. But I think on average, I don't expect so much more sanctions on such a big amount of companies. So probably there are quite some opportunities to do. But you'll sit with uncertainty.
Where do you see, just in terms of the Russian sanctions now, where would you see those opportunities after the sell-off then?
Well, if bonds go down 10% and in some of those names which are not at all affected, if there are no sanctions really coming, I think there are opportunities. But we didn't trade much because liquidity was a bit out of the market.
Right.
It means if you want to implement the trade, you'll pay a bit more than what you expect. If you want to sell, you get less than what you do. So the liquidity is a bit low at this moment, so there was not much to do right now. There's a lot of uncertainty. But I think, yeah, Rusal, you see extreme forced selling because all the US investors have to go out. Within a month, that's quite severe.
Yes.
It's also going out of indices, that's minor. It's mainly those investors need to sell it, and there are not many people who are willing to buy. The company itself is quite a big in problem, so there are many reasons to see a low quote on those bonds right now. The other problems, trade war.
Yeah, potential trade war with China.
Potentially much worse. It can affect the whole world. It can affect not just China. If it's only with China, it can still affect many others. But I do see many good things there as well. No, I don't like a trade war, clearly. Trade war is bad. EM did profit a lot from global trade.
Emerging markets profited a lot.
Open trade, global markets is very good for emerging markets. Trade wars tend to be bad. People who are not following the rules, it's not good. It's much better to follow the rules. The way Trump is talking, etc., is very often worse than what he's intending. You see him moving around all the time.
His positions he
did go. First thing he did do when he was president was going out of TPP, and a week or almost 2 weeks ago he said, "Oh, maybe we should go back in." I think they understand. It's painful for them not being in there. It's a better way to be in there, to decide yourselves on what the rules are gonna be. And he feels the pressure of many of his voters, mainly the farmers in this time. They see a big market going away. They had China retaliating on some of the products like sorghum, etc. So he feels the pressure. And I found it a great signal that he says, yeah, maybe we should go in. And probably we'll be able to sell, yeah, but we have a much better agreement. I think that's about the same what he's going to with NAFTA. Very few changes, saying it will be a fantastic deal. In fact, trumping his electorate, that's what he's probably doing.
Yeah, I understand. What about for investors in Asia? There's obviously a huge amount of focus on this idea that there may be an open trade war between the US and China, yes. Which has obviously fueled a massive portion of Asia's business in recent years. How would you recommend an Asian investor handle that unpredictability, that uncertainty at the moment?
I think investors must live with uncertainty. If most don't like uncertainty and they go out of those investments, that's very often not a good case. Uncertainty creates very often better prices, and very often it's a moment to go in. But you have to diversify your risk. That's the thing what you need to do if you invest. So if you get a trade war in China, I think countries that may be affected a lot will be at the same time Hong Kong and Malaysia, because they export a lot to China, which is then exported further.
Okay.
But in general, trade wars, people tend to overstress how bad it can be. Normally it doesn't affect GDP by a huge amount. It will affect it, it's bad, I hate it, but you should not overstress it neither.
Well, let's see if it truly breaks out. As
yeah,
you say, there's
exactly.
a lot of unpredictability between what's said and done. Now let me add the rising US interest rates to that mix. Again, for a more Asian-focused investor, how would you recommend playing that?
I think there's too much concentration on what the Fed is doing. Rising rates is normally not good, because if you're talking EM as a hard currency investment, it means EM in dollar bonds mainly. So if the Fed moves rates, the Treasury goes up, and if your spread, so that's the interest rate difference between your EM bonds and the Treasury bonds, if that don't move, rates go, the rate on your EM bond goes up a little bit, and obviously if that's quick you lose some money. If it's slow, it doesn't mean you need to meet money, because you have to compare with the forward rates, right? So you can absorb some increases. But what we see most of the time, and apparently not so many people realize that's when you have a hiking cycle, when rates in the US goes up, very often the spread decreases, and even sometimes the rates on EM bonds falls. That we've seen in the previous hiking cycle, and the one before at the end of the 90s was also a moment when EM did perform very well. The one before that with the Asian crisis was one that EM did perform very badly. So it's really not a given. If the Fed rises rates, this is bad for EM. So if you have a good cushion that the spread can decrease, you're in a very good situation. Now in Asia, valuation tends to be a bit tighter on most of the bonds, so there's a bit less cushion on Asian bonds, I think, than on other bonds.
Okay. Now you spoke before about diversification in terms of times of unpredictability, uncertainty. How have you defined that in your portfolio?
Oh, we go for value really. And we not concentrating on one trade that we think this is fantastic. We have many trades that we think here we can make some money. And generally you're very patient with investments. I think that's very important, to be patient when you invest. We're never there to make money on the next few weeks or months. That we don't really care. We're not going for fashion trades, which may be very crowded and maybe for wrong reasons than valuation. For us, it's valuation that counts.
So really during these times of unpredictability and also turbulence, you're not trading necessarily more the portfolio or turning it over more than you would in kind of quieter times?
No, not really. It depends. If this turbulence creates opportunities, then probably I will trade a bit more. For as much as very often you see less trades and liquidity a bit lower, and then the cost of trading becomes higher. So that may reduce my trading at that moment. So you may have a conviction, but if on a trade you think I'll make like 3%, but I lose 1.5% on trading, probably I'm not going to do it, because I can be wrong as well.
Very tricky equation. Thank you very much, Luc Doge.
My pleasure, Catherine.